Welcome back to Today Assets Report, the channel that keeps you ahead of the curve on everything crypto, markets, and money. If you are new here, you picked the perfect day to tune in because we have got a packed show for you today. We are talking XRP, we are talking Ripple's CEO dropping some serious knowledge live in Australia, we are talking diamonds, yes, actual diamonds on the blockchain, and we are going to break down what is really happening in this crypto market right now because there is a lot of noise out there and very few people giving you the real signal. So stay locked in because every single segment of today's show matters. Go ahead and hit that like button right now because the morning video run is alive and well, and we are going to keep that energy going all the way through. Let's get into it. Right now, XRP is sitting at around 140, up about 0.37% on the day. Now, on the surface, that might not sound like the explosive move a lot of you are waiting for, but there is a lot more going on beneath the surface than that number suggests. We have got PPI data dropping this morning, which is the producer price index, and that always has the potential to shake the broader markets one way or the other. Yesterday, initial jobless claims came in pretty much right on target with what analysts expected, so that did not really move the needle in either direction. The market has been in a bit of a holding pattern since Wednesday's big day, and Thursday and Friday have felt relatively quiet by comparison. But do not let that fool you. Quiet markets have a way of setting the stage for big moves, and there are several factors in play right now that could push things in either direction before the weekend is over. One of those factors is the ongoing situation between the United States and Iran. There have been talks happening, and right now it feels like things are calming down a little bit, like maybe the tension is easing up slightly. But we have all been around long enough to know that what looks like calm can sometimes be a false flag. Things can flip quickly in geopolitics, and when they do, the markets feel it almost immediately. Any headline that comes out of those negotiations, positive or negative, has the power to move risk assets across the board, and that absolutely includes crypto. So while today might feel like a slow Friday morning, we need to keep one eye on those developments because Freaky Friday is a real thing in these markets and surprises happen when you least expect them. Bitcoin is holding around $67,000 right now, which shows relative stability after Wednesday's big surge, but nothing is guaranteed heading into the weekend. Now, let's talk about what Ripple's CEO Brad Garlinghouse had to say at the XRP Australia conference, because this was genuinely one of the more thoughtful and important things he has said publicly in a while. He was talking about what it actually takes to see meaningful progress in a market like this, and he used this analogy of light switches. He said it is not one switch that gets flipped. It is not even 10 switches. He said it is 100 switches, 1,000 switches, all being flipped one at a time, slowly and steadily. And at some point, you look back and realize the light has been on for a while. You just did not notice exactly when it turned on. That is a powerful way to think about where XRP and the broader crypto market are right now. It is not about one announcement or one news headline. It is about the accumulation of progress over time. Brad went on to say that he has tremendous optimism about 2026 and beyond, and he mentioned that Ripple is essentially on a world tour right now, meeting communities and advocates everywhere from Australia to the Middle East to the Americas. He specifically called out the passion he is seeing in the Australian XRP community, and that kind of grassroots energy matters more than people realize. When you have a passionate and informed community advocating for a project, debunking misinformation, and spreading awareness at the ground level, that becomes one of those light switches Brad is talking about. Each event, each person, each conversation adds to the cumulative weight of progress. And while it can feel frustrating when the price does not immediately reflect all of that positive momentum, Brad's message was essentially, trust the process, because the process is working. This brings up something that a lot of XRP holders feel deeply, and that is the frustration of seeing good news after good news without seeing it immediately reflected in the price. And honestly, that frustration is completely understandable. When you see positive development after positive development and the chart barely moves, it can feel like the market just does not care. But here's the thing. It is not that the market does not care. It is that XRP is now an $86 billion market cap asset, At that size, good news does not just automatically translate into a 10% price move. You need billions of dollars of new buying pressure to move the needle in a meaningful way. A listing on a new exchange, a new partnership announcement, a regulatory win. Those things matter enormously for the long-term story, but they may not cause an immediate explosion in price the way they would for a smaller, less established asset. That is the reality of being a major player. And speaking of the broader market environment, let's talk about what has been weighing things down, because there is a really interesting perspective from Matt Hogan, the Chief Investment Officer at Bitwise, who put out a tweet recently that cuts right through a lot of the speculation floating around. He basically said the conspiracy theories are running wild. First, everyone blamed Binance, then some mysterious offshore hedge fund, then paper Bitcoin, and now Jane Street is the villain of the week. His point was direct and refreshingly honest. He said the real reason Bitcoin has been under pressure is actually pretty straightforward. A lot of people who were long Bitcoin decided to sell. They sold through spot markets, they unwound leveraged positions, they wrote calls against their holdings, and they did it for a whole range of personal and institutional reasons. 4-year cycle concerns, quantum computing fears, reallocation into AI startups, and so on. That is it. That is the boring truth. Now, does that mean there is zero market manipulation happening? Absolutely not. Market manipulation is real, and it happens in crypto just like it happens in traditional finance. Algorithmic trading from large institutional players absolutely has the power to suppress or amplify price action across the board, and that includes the top 50 or top 100 crypto assets. But the key distinction Matt is making, and it is one worth taking seriously, is that blaming manipulation as the primary explanation for every market downturn is intellectually lazy. The bigger picture here is that a lot of long-term holders took profits or rebalanced, and the weight of that selling has been the dominant force in the market since late October. As that selling pressure exhausts itself, the path of least resistance shifts back upward, and Matt believes we are in the process of finding that bottom right now. There was also some really exciting on-chain news for XRP that deserves attention because this speaks directly to the long-term utility case for the asset. Flare Network has announced an integration that will bring 2 billion XRP into DeFi through a partnership with a digital wallet platform. The key innovation here is that all of the cross-chain complexity, which normally requires multiple transactions and technical steps, is reduced down to a single transaction on the XRP ledger. What that means in plain English is that XRP holders will be able to participate in DeFi activities like lending and yield generation in a way that is simpler and more accessible than ever before. This kind of development is exactly the type of thing that adds to the long-term utility and demand case for XRP, even if it does not immediately cause a price spike today. It is another switch being flipped. And then there is the diamond story, which honestly sounds like something out of a science fiction novel but is completely real. A senior executive at Ripple who oversees the Middle East, Asia, and Africa regions posted about the tokenization of over $1 billion worth of diamonds onto the XRP ledger. We are talking about physical diamonds valued at around $280 million in inventory, being held in custody through Ripple's custody solution, with the transfer and trading of those assets happening natively on the XRPL. The Ripple exec called it a masterclass in how the XRP ledger handles high-value, real-world assets at scale. And he is right. This is exactly the use case that positions XRP as more than just a payment token. It is a settlement layer for real-world value, and luxury commodities like diamonds are just the beginning of what is possible here. On the regulatory front, there is some encouraging movement happening in Washington as well. U.S. lawmakers are introducing something called the Promoting Innovation in Blockchain Development Act of 2026, which is specifically designed to protect blockchain developers from criminal liability under certain federal statutes. This is a big deal because one of the things that has historically scared legitimate developers and entrepreneurs away from building on blockchain platforms is the legal uncertainty around whether their activities could be considered criminal under existing financial laws. If this bill moves forward, it removes a significant barrier to innovation. And of course, the bigger prize is still the Clarity Act, which would establish a comprehensive market structure framework for crypto in the United States. And JP Morgan recently said that if that bill passes, the crypto market could see a significant boost in the second half of 2026. JP Morgan making that kind of statement is worth pausing on for a second, because this is the same institution that has historically been one of the most skeptical voices on crypto. The fact that they are now publicly connecting a potential regulatory win to a meaningful bull case for the market tells you something important about where institutional sentiment is shifting. The big money is paying attention. The big money is positioning. And when the regulatory clarity finally arrives, not if, but when, the institutions that have been sitting on the sidelines are going to move, and they are going to move with the kind of capital that can genuinely move markets at scale. That is the macro setup that long-term XRP holders and crypto believers have been patiently waiting for, and we are getting closer to it every single day. There was also some fascinating data from a crypto exchange that has been tracking XRP spot activity closely. Between February 23rd and 24th, when XRP's price was actually pulling back toward recent lows, retail purchase volume spiked a staggering 212%. And not only did buying volume surge, but buyers were outpacing sellers by more than 2-to-1 during that period. What that tells you is that when the price dipped, real people with real conviction stepped in and bought the dip aggressively. And sure enough, following that accumulation window, XRP recovered and pushed back toward $150. That is not a coincidence. That is the market at work. Long-term believers taking advantage of short-term weakness to add to their positions. It is also a reminder that price action alone does not tell the whole story. Sometimes the most important things are happening beneath the surface. Now let's zoom out for a second and think about the bigger picture, because this is not just a crypto story. This is a technology story and an economic story. We are living through a period of technological acceleration that is genuinely unlike anything in recent history. Moore's Law, which historically predicted that computing power would roughly double every 2 years, is now being outpaced significantly by the actual rate of AI development. What used to take decades of research is now being compressed into years, sometimes months. We are seeing it in medicine, in logistics, in finance, in content creation, and yes, in crypto and blockchain development too. Companies like Square are already cutting significant portions of their workforce and replacing those roles with AI-powered systems. That is a seismic shift in how the global economy operates, and it is happening right now, in real time. So what does all of this mean for you as someone who is paying attention to XRP and the crypto market? It means that patience and perspective are your most powerful tools right now. The switches are being flipped, one at a time, steadily, consistently. The regulatory environment is improving. The institutional interest is growing. The real-world use cases, from cross-border payments to diamond tokenization to DeFi integration, are expanding. The technology is getting faster, cheaper, and more secure. None of this happens in a straight line, and none of it happens overnight. But the direction of travel is clear if you are willing to look past the daily price fluctuations and the noise on social media. Stay informed, stay dynamic, and stay ready, because when this market decides it is time to move, it will not wait for anyone to catch up. Thank you for watching Today Assets Report. Keep doing your research, keep your conviction strong, and as always, let's go make some money.